So back to DraftKings, we've got some gaps here, and we just refilled this last one. I've got them labeled because I wrote about it, like I mentioned. And if you haven't studied the different types of gaps, they're real basic, and it helps you kind of understand what to expect. So like there's 3 here, so I just want to run through them, right? So the first one, the breakaway gap, that typically happens, or what you're looking for to identify that is a consolidation period. So we had the consolidation going back from, I'll say, above my noggin here to right above K in between where we get to SHAUN, right? So that's really, in reality, consolidating from February to about May of this year. And then there was a gap breaking well above that consolidating kind of zone and on decent volume. And so then from there, we get a continued climb higher. So nothing massive, but it was a break out of a consolidation zone is what effectively what that is. The runaway gap is when it's already taking off and then continues to rip in the same direction, but there's a gap in the middle. So you can see we had already been ripping out of the prior zone off of the 2641, and you get this runaway gap that showed up on our way to 30. Great. I think this is off of great earnings and everything from DraftKings. So now we consolidate for a period of time, and then we get this exhaustion gap where it's basically run up so far, the momentum, it just can't sustain it, and so we gap down, and that's normal. The reason you want to understand these types of gaps is some gaps are more likely to fill than others. There's a common gap too that just kind of appears and there's no real rhyme or reason, and those fill more often than others. Exhaustion gaps tend to fill because it's just a break in the action, and then resume the trend. And if it doesn't, fill, and the trend might be in questionable at that point. But like a runaway gap, those may not fill. This one happened to. A breakaway gap may not fill, and the reason being is we've broken out of a consolidation zone, and maybe the decision's made and the price action is going to continue. So they do fill, but they're just less likely to fill, and hence you get the phrase that everybody talks about: gaps are likely to fill 80% of the time. So anyways, that's what I've been looking at DraftKings.
I have a question for you. This is amazing, Nate. Is it always in this order? Like do you always have a breakaway, runaway, and exhaustion, or is it no?
It makes sense, but I did not come across any of that in my study. But that would make a lot of sense, right? Because you would be breaking out of consolidation, then you get the run up, and then you get the exhaustion. So yeah, maybe this is a pattern that you would see. That's a great question.